Okay, aggressive with long positions. 119. What's their average size? 65. We're almost double the average size. This is super aggressive. That's why the coloration of the cells are turning red. It's to show you just how aggressive they are. How's it going, fellow traders? Magic Trader here. It is Sunday, April 21st, 2024, and today we're going to take a look once again at the latest set of data that came from the CFTC. Largest institutions in the world have to record or report their positions, and here is a brief snapshot of those positions held on the major pairs. We got gold, silver, copper, and all that good stuff. Just by taking a look at this, what sticks out? Let's look at the change column. What sticks out? There should be two numbers that stick out there. One is 276,000 to the positive for the S&P 500. That's right, massive amount of long positions were just added on the S&P 500. And bonds, a big shift to the bullish side by 128,000. That is huge-o. Absolutely huge-o. All right. So let's start by taking a look at gold as we always do. And what do we see with gold? Well, first of all, let's get our pen. And if we take a look at gold, we can see that over the last few weeks, they've been adding aggressively to their longs, which is, apparent because we had the move to the upside. And so now over the last 3 weeks, they've been slightly reducing their longs. Why is that? Well, I think it's probably because they're taking profits on some of those positions up here. Now, we had a big strong move to the upside. I believe that we're going to be getting some ranging on the lower time frames sideways. And during this ranging phase, which I think will take place in the month of May, I think it's going to be extremely important to keep an eye on these numbers here on the long column, because if we see them start to decrease, then that will be suggesting that we will likely be seeing a drop in price. Okay, but if they don't decrease and instead increase, then that will be new demand, new buying coming into the market, and we will likely see a continuation of price to the upside. All right. I think the odds are, considering what is taking place on the charts, the odds are that we will likely see a drop in price. But it's too early to tell. I'm just basing this on what I'm seeing with respect to the supply and demand and the formations being created on the chart. All right, that's all I can go for or go with is what I'm seeing. But another thing I'd like to add is that retail traders are about 54% short right now. So they're not long, they're not short. If we take a look at the 4-hour chart, we can see that recently they were starting to get a little bit more slanted to the bear side with their positions. But as price continued to make a move to the upside, they start to bail on those shorts. We can see 64% now has turned into that 54%. So they have definitely bailed on those positions. All right. So that's how gold looks right now. Let's go over to oil. Oil has been bullish. And it's interesting how oil was contacting a significant buying area down here. And then we had the conflict that took place. Okay, remember that started in October. That was as price was coming down into this area of buying. So we have institutional buying, and we know the institutions were buying because we could take a look at the long column and we can see that they were buying, and demand came in. And now this last week we saw a push to the downside. Why is that? Well, I think it was perfectly timed with the news of Israel counter-attacking Iran, okay, after Iran shot some missiles into Israel in response to Israel bombing an embassy of Iran's. So we had that situation, and I think a lot of retail traders were lured into buying oil at that point. And it seems like they use this, banks and institutions use this as an excuse to get out of some of their long positions. It's too early to tell now because this data represents this peak here. But next week, we're going to see what happened with this drop in price. Like I said, I think it's likely that they took profits on those long positions, which caused the move to the downside. So overall, not much going here. I'm not trading oil at this point because the chart formation is not in line with what I'd like to see before entering a trade. So let's go to the dollar. What do we see here? As I have been mentioning over the last few weeks, dollar shorts became aggressive, as you can see here. 14, 19, 25, 27, 30. But as I was mentioning to students, I said, don't worry about what they're doing with that number. Focus on what we're seeing with the other dollar pairs, which was an increase in longs. And so I mentioned that we are likely going to see a push up in price, and this is exactly what we got. Okay, if you take a look at the chart, you can see that big drive to the upside is what took place. Okay, so the dollar. Now, we can see the dollar is contacting what? An institutional supply area, right up here. Okay, this was a supply area that was contacted before, and now it's being contacted again. So what do we expect? Well, some type of reaction from there. And when we look at the other dollar pairs throughout this video, you're going to see what the bias is likely going to be going into this next week. So I want you to pay very close attention to the other dollar pairs when we get to them. All right, but for now, let's go and skip through and look at the Aussie. Look at the Aussie, big push to the downside. Look at their positions, folks. Look at where longs are right now. What are you seeing when you see longs? What are you thinking right now? Take a look. Okay, 143,448. And all-time maximum size is 145,000. Okay, so we're just about maxed out. Or I should say the institutions are just about maxed out on their positions. And we've been tracking the Aussie for quite some time, and we have a good idea of what tends to happen after they've been maxed out. For instance, if you look here, these dark clouds represent when they were aggressive with short positions. Eventually, they have to take profits, which fuels a move to the upside. Okay? So you see that. Aggressive, and then all of a sudden, we get upside pressure. And so now again, if you take a look at short positions, they were accumulating and now getting aggressive. So what is logically the bias right now? By just looking at the bank's positions, right? Upwards. Wouldn't it be interesting now to take a look at retail sentiment, maybe? Probably. So let's go over to the Aussie and take a look at what retail positions are. So here's a 4-hour chart. I've been tracking the retail positions, and what do you see? Well, you see that recently they reached 95% long. That's quite aggressive. So they've already started to pile or to exit out of their longs, because now we're at 83% here. So they're no longer focused on long. So what do you think is likely the scenario now? Push to the upside. What do you think is going to happen when price starts pushing to the upside? What do you think retail traders are going to do? Start piling into shorts. And what did we just contact right now? Institutional demand. Interesting. So I have a bias to the upside with respect to the Aussie, and sentiment is looking good with respect to retail and institutional positioning. All right, so bias for Aussie is to the upside. USCAD. Okay, remember I told you let's focus on the other dollar pairs. Well, first of all, let's go to the chart here. What do we see? As I mentioned to students, we're likely going to get a push to the upside, so that's what took place. Okay. And now price is pausing at the highs. Why is it pausing? Well, let's look at positions here. If we look at positions, what do we see? We see that they're aggressive with shorts. Sorry, longs. Okay, aggressive with long positions. 119. What's their average size? 65. We're almost double the average size. This is super aggressive. That's why the coloration of the cells are turning red. It's to show you just how aggressive they are. So likely they're going to take profits on those longs, which will fuel a move to the downside. All right. Well, what happens if we look at retail positions? What do we see? Anything to suggest that there's going to be a move to the downside? Well, I could tell you one thing. Right about here, retail traders were 91% geared to the short side. What have they been doing since? Offloading those short positions. Okay, and then what are we starting to see? Pressure to the downside. Do I think it's going to continue? Yes, I do think it's going to continue. Okay, because they're offloading those shorts. All right, and what do you normally see when they offload shorts? Look throughout here. You see a push to the downside. Okay, so I think this is what is taking place right here. And again, retail sentiment and institutional positioning is giving us this clear bias of downside pressure. US Swiss, they're not maxed out in positions here. They still got lots of room. 50,000, but they have been focused on collecting long positions, right? And then again, we see the push to the upside in price. 78% of their positions are geared to the long side at this point. And this is what we've got here. All right. Let's go over to the US Swiss. US Swiss retail positions are at 78% right now. 78. So let's just update the chart here, right here, with my little bubble. You see how I do it? 78%, and I have templates, and I just pop it in like that. 78%. So what are we seeing? Similar to the USCAD, it used to be 90, now 78. You see how prices starting to decline as they offload those short positions. So likely they will follow suit. Price will follow suit with the other dollar pairs, and we'll see price declining. Okay. Euro, here's the big one. Here is the big one. So I've been saying for months now that banks were going to take profits on long positions, and this has come to fruition. And you can see here, you know, the steady, slow decline in long positions. And I also said that they were going to start to likely build a short position. As you can see, they've been doing that over the last several weeks, starting mid-March, give or take, around that area. Okay. Overall, look at what we're seeing here with the numbers. Okay. Overall, net positions slowly getting less and less and less positive. So we're seeing a switch in momentum here. Now, recently I was pointing out with respect to the euro that retail traders were aggressively long down here at the lows, aggressively long. So let's bring up that data so you can see it. Here's a 4-hour chart of the euro US dollar. And as you can see by looking at the numbers down below here, you can see that recently there were about 91% down here at the lows, about 91% geared to the long side with heavy volume. But since that time, we had a push to the upside and then a move back down. And what you can see now is their percentages have lowered. Okay, now we're at 70% last time I checked. Let's look. Currently 73. Okay, so they added a little bit back, but the volume is very low at this point. Okay, they've already offloaded more than half of their positions. So volume is very low, but they're not as aggressive with their bias to the long side any longer. Okay. So what do we suspect will happen? Well, what do we say with the dollar pairs? Downward pressure. So what's the opposite of downward pressure? Upward pressure. So our bias is upward pressure for this week. Okay? Simple as that. Upward pressure for this week. All right? All right, so let's look at the pound. Pound was an interesting one. Look what happened when their positions reached 123,000 over here. Okay, let me just show it to you. 123,000. What was all-time maximum size? 135. So they got pretty close to reaching all-time maximum size. Then what do? Take profits. Okay, we mentioned this weeks ago, that they were likely going to take profits, and that would fuel a move to the downside. And now you can see what happens when they take profits on those positions. Push to the downside. Now this chart is a lot weaker than what we're seeing with the euro. Definitely a lot weaker. But over the last several months, we've seen that there's not a perfect correlation between the two. Pound has been kind of doing its own thing, moving relatively in the same direction as the euro overall, but the timing has been slightly off with how the pound has been moving with respect to the euro. Okay, but nonetheless, we see the push to the downside now, weakness. And let's go over to the pound and take a look at what their position is right now. 85% long. Okay, I just checked the latest number, 85%. So that's where we're at right now, 85. So pretty aggressive, pretty aggressive. The price is dropping. So what do retail traders typically do? They buy on dips, right? That's typically what we see from them, is buying on dips. So price is dropping and they're buying on the dip. They should not be buying because the banks are offloading those longs to them. Okay, if retail traders knew how to read the CFTC data, they'd realize the banks are taking profits on longs. So why should you be buying? You don't want to be doing the opposite of what the banks are doing. Otherwise, you can get yourself in trouble, as you can see. U.S. dollar, Japanese yen. Look at this one. Big push to the upside. We had our targets up here. For the longest time, we were talking about bullishness. We were talking about how eventually price is going to go higher. Now you can see that. And we look at long positions. What do you see? Super aggressive. Right now, they're 215,000. What's the largest size they ever had? 237. Are they getting close to that? Yeah. What typically happens when they get very aggressive with positions? They tend to need to take profits. And then what happens? Usually, price will tip over. Okay, that's what usually happens. So let's look at retail sentiment. The numbers for retail right now, they're about 79% short. That's the exact number. So last time I checked, it was 79%. Are we seeing something? Are we seeing something again? 83, 79. What is retail doing? Offloading their shorts. So downside pressure eventually. Timing, don't know it. Okay, very, very difficult because the strength in this pair is incredible. So the timing is going to be very difficult. But you know, when I look at all the data and think of it critically, I see that it's showing me evidence that eventually this is going to tip over and price is going to drop. Okay, let's go over to the last one. Kiwi, and what we see, aggressive with shorts, but nothing close to their all-time aggressive position. We see pressure to the downside, just like with the Aussie. And because the two usually move in tandem, and we're expecting upside pressure, I suspect that we're likely going to see price move to the upside here, okay? 76% retail are long, okay? 76. So let's go over to the Kiwi and look at the 4-hour chart and take a look at the sentiment. And they used to be 96%. 96%. And now, what did I say? 76%. So let's just change that to, oops, nope, that's not what I wanted. 76%. Here we go. There we go. 76%. So you see this theme here, right? Again, where they're used to be aggressive with longs, and now they are becoming less so. So what typically happens when retail start to offload their longs and start getting into shorts, that tends to happen. So bias is to the upside with the Kiwi. All right, folks, there is your latest CFTC data. Hope you enjoyed it. Hope this information helps you with your trading in this coming week. And if you want to learn more about how we trade at the school, come to www.whiteoakfx.com. We would love to have you. We've been getting a lot of students signing up. It's madness. We're doing a lot. We're doing classes, weekly classes. We're teaching so many people from around the world. We'd love to have you. Come and join us. All right? And that's it. Enjoy the rest of your Sunday, and we will talk to you throughout the week. Take care. Bye-bye.